Yeah, I'm eager to hear from our next guest, Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center. He joins us as he does each and every Friday on the phone from New York City. Dr. Lustbader, what did you think when you saw this news from Merck this morning?
Thanks, Tim and Carol. Happy Friday.
Yeah.
Very exciting, and I think very hopeful. You know, we do have a number of antivirals, and we can certainly use more antivirals. We have antivirals, fortunately, for HIV, hepatitis C, cytomegalovirus, herpes virus, drugs like Tamiflu, oseltamivir for influenza. And I think this is really a big addition to the armamentarium, with about a 50% reduction in hospitalization in about 775 patients. So there was a reduction of about 14% in the placebo group, 14.1 died or were hospitalized versus 7.3%. So those are, you know, very helpful numbers. I still think the most important thing individuals can do to really reduce their risks would be, you know, get your weight under control, get diabetes under control, better diet, plant-based diet, vitamin D supplementation. You know, don't overdose, but check your levels. Treat your diabetes, treat hypertension. You know, overall health is probably the best thing we can do while we're waiting for these breakthrough medications.
And get vaccinated, right?
And get vaccinated, Tim, absolutely. That's very effective. And I think this drug, which is interesting, looked at the unvaccinated population, which is where they saw that reduction. So hopefully of those 70 million yet to be vaccinated, hopefully many of them will agree to that. Certainly some will be getting COVID. Well, and this should encourage them to do that as well.
Dr. Lustbader, there's a really interesting story playing out in the equity market right now because you have shares of Moderna under pressure, down 12% on this news. And it's a story that I kind of have trouble understanding. Because there is this treatment, do you think that fewer people will get vaccinated? Because that's part of the thesis as to why Moderna shares are down.
I don't think so. You know, Moderna and the mRNA technology is not just for COVID. You know, without talking about specific technologies or stocks, the mRNA technology may be useful for a variety of cancers, other viruses. So, you know, to me, Moderna and Pfizer, among others, have great long-term potential because there will be many other diseases and infections and other conditions that may respond well to mRNA vaccines. So I think it's probably an overreaction on both stocks, quite frankly.
But I do wonder, do you think, and I'm curious if there's any conversations yet at the hospital or among colleagues or even from patients potentially on this news, that they'll be all in on a treatment like the one from Merck versus getting a vaccine? Are people more likely? Because we've had the conversation in the newsroom, Ian, that it's like, okay, well, the anti-vaxxers say, yeah, I don't want this either, you know, and just curious what you're hearing.
You know, I think there is a strong cadre, and we're seeing this with mandates for vaccine, both in New York State. Some of the hospitals may be letting go 9,000 workers, healthcare workers, because they refuse to get vaccinated.
Wow.
And, you know, many of them should know better. These are big hospital systems. So I think there may be a hardcore group. Part of it is social media that scares people. You know, part of it, you know, we do have to understand people's individual choice. But so I think for that hardcore group that is really reluctant, at least this is an early treatment option that may be beneficial. But yeah, I think the data to me is pretty overwhelming that vaccines are helpful. Hopefully that will continue. And I think companies like Merck and Pfizer really have great potential in many other areas along the way. And it's going to be a combination of things. This may be helpful for breakthrough patients. So even if you're vaccinated, you know, it could be monoclonal antibodies. It could be the Merck drug, you know, despite being vaccinated. Remember, this study was in unvaccinated, and I'm sure the data may even be better. We have to look at it for vaccinated people. So I think everything is an added arm of both prevention and treatment, which I think should get us through this until the spring when hopefully we will be talking about COVID as a distant memory or maybe as a chronic disease and in some areas seasonal, but I think most people will get through it probably in the next 6 months, although the next few months could be a little rough with influenza as well.
Hey, listen, just got about 45 seconds. You shared with us a story that's out there about the Biden administration releasing a rule for how healthcare providers and insurers should implement legislation prohibiting what are known as surprise medical bills. Some thoughts for our audience.
Totally. Part of the problem with people, not everyone is covered. Not everyone takes universal. We don't have the universal health care. We don't have universal electronic medical record. And patients can be faced with surprise bills. Medicine is very not transparent, very opaque. And I think this ruling is a step towards publicizing what are your prices, what are the real prices of things, so that people can shop around and not be surprised by bills thinking they were covered, and it turns out they're not really covered.
Something to think about. Yeah, it's it's always complicated with all this stuff.
Complicated is like an understatement. Okay. I mean, there are services that companies pay in order to help their employees navigate these things.
Exactly. I remember my sister, who's involved in the medical world, and she'd just be like, the amount of time we've spent on figuring out coverage and working with health insurers. It was frustrating because of the time it took away from patients. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone. Be well. Have a good weekend. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, it is Bloomberg Business Week, the Friday edition. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. We're going to get an update on the latest out of D.C. It felt a little frantic yesterday, but we did stave off. Which one?
A government shutdown.
A government shutdown.
Yeah, we did.
I don't remember because there's like there's several components going on right now.
There's three different components happening right now.
Yeah.
And we're going to get an update from Joe Matthew in just a few minutes. Remember, last night, Nancy Pelosi sent lawmakers home after the hours of negotiations failed to produce that agreement. A big setback for the president.
The vote.
She didn't take the vote.
We'll see what happens today. All right, let's get another check on the trading day and your top business stories. Back to Charlie Pellet.
Hi, thank you very much. Best level of the day. Let me put in a shameless plug for Joe Matthews' program. Fantastic program, 5 o'clock Wall Street time. Got Washington covered, and it is an incredible show. Bank of America's online banking platform down for several hours today, leaving thousands of customers locked out of their accounts. They do say they're getting those outages fixed. Bit by bit, things are coming back on. Bank of America rallying along with other financials today, up right now by 2%. Stocks climbing as prospects for an economic recovery outweigh concern over faster than estimated inflation at a time when the Fed is getting ready to wind down stimulus. Best level of the day right now on the U.S. equity market with the Dow, the S&P, NASDAQ all rallying. S&P up 50 now, up 1.2%. We've got the Dow up 510, up 1.5%. NASDAQ up 96, up by 0.7%. 10-year yield 1.47%. Spot gold up 0.1%, 17.59 the ounce. And West Texas Intermediate crude up 1%, 75.76 a barrel. Merck shares surging today. Look at Merck. MRK on the ticker up now by more than 10%, up 10.1%. Biggest gain 12 years after the company's experimental pill slashed the risk of getting seriously ill or dying from COVID-19. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he says this pill could be an important weapon to prevent additional stress on the hospital system.
When we have these COVID-19 outbreaks that stress the hospital system, other diseases, people coming in for other types of care suffer because the hospital resources are strained so thin. So you want to keep people out of the hospital, you want to reduce disease severity, and then on top of that, if you can reduce the number of cases and transmission, then you've got extra benefits in terms of controlling the disease.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names, they are lower on this Friday here, with Pfizer down 0.3%. Its German partner BioNTech, its ADR is down 7.5%. AstraZeneca's ADR is down 0.5%. Moderna down now by 11.7%. J&J down 0.4%. Again, Merck shares surging by 10%. Recapping, 10-year yield 1.47%. Spot gold up 0.1%, 17.58 the ounce. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So I'm going to be really honest with you. Tim and I were kind of scrambling. Do we have the latest on what's going on in D.C.? Because yesterday seemed a bit frantic.
Well, fortunately, we have Joe Matthew with us, who can actually give us the latest, even if we can't give it to ourselves. He is in the thick of it, and he's actually joining us from the White House. He is the host of Bloomberg Sound On. It airs each and every weekday at 5 p.m. Wall Street time on Bloomberg Radio. Joe, it is great to have you back with us on the program.
As always.
What is the latest?
Well, that's a good question. This is fast and furious. Carol, the way you characterized yesterday is exactly how I would describe today. This is where things are something's about to happen here, okay? We're going to get a briefing from Press Secretary Jen Psaki in, any minute now. As soon as that is done, President Biden, the motorcade, are rolling up to Capitol Hill. And there's going to be an in-person meeting, a family meeting, and now the parents are all going to be in the room, okay? So obviously last night things didn't go the way Nancy Pelosi hoped. As you mentioned a couple minutes ago, Carol, she walked out of the House a little after midnight, and at that point said there will be a vote today. It's still today. We don't know if there's actually going to be a vote. This feels strikingly similar to this time yesterday. But this is the new wrinkle here, is that Joe Biden himself is going up to the Hill around 3:30, about an hour from now, Wall Street time. He'll be in the second of 2 Democratic caucus meetings. They're going to close the doors. They're going to try to hash this out. I don't know if this results in a deal. And by the way, we're talking about the bipartisan infrastructure deal. They did pass a bill yesterday to fund the government, so there's no shutdown this morning. Whether he can get to a deal remains in question, but it is believed that he wouldn't go to the extent and stick his neck out and create these optics unless he thought they were close. That is pure speculation on my part. If you think about it, though, you know, if they got a deal and he didn't go up there, it's one thing. If they did not get a deal and he never went up there, people are going to say, what are you doing at the White House? Come out of the White House, do something, get involved. And so the White House is leaning in.
So, Joe, what do we know about what that deal could look like?
Well, it's a good question because we learned yesterday from Senator Joe Manchin. I was in a very big scrum with the senator from West Virginia that he gave a number, $1.5 trillion. That really slowed things down because progressives are looking for more than twice that on the reconciliation bill. This is the second part of it, the human infrastructure bill. One cannot move without the other if you talk to progressives. So the hope here is to get progressives comfortable enough with what they're crafting in this reconciliation bill to vote for infrastructure. But I've got to tell you, from Bernie Sanders to Pramila Jayapal, who's the chair of the Progressive Caucus in the House, they've been telling their members, vote against infrastructure. They said this thing can fail, we'll come back and do it another day because they've never budged on this. They want reconciliation not promised, but passed in the Senate before they touch the infrastructure bill.
Bit of a game of chicken here. So what's likely? What are you hearing from D.C. watchers? And as you roam the halls of Congress, Joe, what's likely? I mean, are the progressives, really risking losing even some human infrastructure here?
Yeah, everyone is risking losing everything right now because if you're a moderate Democrat too and you want that infrastructure bill, well, you might not get that if you're not going to put up with this business over reconciliation. This is one of these moments where it's very difficult to tell because people are playing it pretty close to the vest and everyone is really digging their heels in. I was saying earlier, could this be the week? Could this be the first time that we actually find everyone in Washington is actually saying what they believe and that they're actually going to do? Because if that's the case, Joe Biden's economic agenda could be in great peril.
So is there any chance that he can get something done quick enough, Joe, before the 2022 election rolls around, that it won't have a detrimental impact on the midterms?
Oh, sure. And if you talk to the White House, yesterday wasn't a real deadline. They met the real deadline, which is averting a government shutdown. That promise Nancy Pelosi made to moderates to vote on infrastructure on the 27th, which ended up being yesterday, which is now today. Well, look, that could be next week. I mean, that's for them to work out. Here at the White House, they say we have time to figure this out, and we made progress. And they actually like the fact that Joe Manchin came out with a number. Now at least everybody's got their cards on the table here. We know where people stand and we can start working with that.
Just quickly, 5 seconds. Do we need to be on guard this weekend? Something could happen?
If there's no deal tonight, it's a working weekend. There you go.
All right, lots of pizza, late night hours.
I like the sound of that.
Me too. You're the best. Joe Matthew, host of Bloomberg Sound On. You can catch that and more with Joe at 5 p.m. Wall Street time right here on Bloomberg Radio.
Well, let's stay in Washington, D.C. and get a check of the latest world and national news. Nancy Lyons joins us with that. Hey there, Nance.
Well, as Joe was mentioning, President Biden plans to talk to Democrats on their home turf today. He's taking his arguments in favor of the bipartisan infrastructure bill and his broader social spending package to Capitol Hill. Congresswoman Pramila Jayapal heads the Congressional Progressive Caucus. She says it's important that the president is talking with them directly.
He is deeply engaged in trying to iron out these differences, and I'm grateful to him for his leadership.
Jayapal does concede that the $3.5 trillion top-line figure for the Biden agenda bill may be reduced in order to get everyone on board. A federal judge today did not issue a ruling, but did question Texas officials on why they went to such great lengths to craft an abortion law intended to hinder judicial oversight. U.S. District Judge Robert Pittman held a 3-hour virtual hearing on a request by the Justice Department to block the law that bans abortions once cardiac activity is detected, which is usually around 6 weeks. Many women might not even know they're pregnant at that time. The White House COVID-19 response team is addressing shortages of rapid at-home coronavirus tests.
The manufacturing is scaling up significantly, doubling across the next couple of months. And we're just going to keep at it to encourage those manufacturers to increase capacity and to drive down the cost of those tests.
Response coordinator Jeff Zients expects production to double the current supply in the next 60 days. Global news 24 hours a day. On air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Hey, Nance, thank you so much. Carol Masser, Tim Stenovic in our Interactive Broker studio here at Bloomberg headquarters in New York City.
I was going to say we're in premium economy.
You don't think that this is first class?
Well, the reason I'm thinking about it is because the story that we're talking about right now, it is among the most read on the Bloomberg terminal, is about airlines ripping out business seats to make a new middle class. And that new middle class is what many people have come to understand in recent years as premium economy. Because, hey, consumers are paying a little more, or willing to pay quite a bit more to get out of coach.
That is so true.
But not so much as to go into business class.
No, because there's a big difference. Like, I mean,
huge.
We all admit, when you go to price a seat on an airplane, I don't know what you need. There is no algorithm that really, well, there is actually.
We just don't know it.
We just don't know it. But I think there's lots of questions about what happens with business travel going forward, because we've seen a lot of meetings being able to easily be done in a virtual world. There's a lot of CEOs say that, yep, there's a lot of business travel that will not come back. So when the pandemic really whacked business travel, carriers were left looking for another way to pad the bottom line. Increasingly, they're finding it in premium economy, where travelers can spend a little bit more money and get a little bit more for their seats, and that ups the profits for carriers.
Yeah, so the trend was already on the upswing before the pandemic, with installations of premium economy seats, not including the plus section of coach, which offer extra legroom, growing 5% annually in the 3 years before the coronavirus hit. Researcher Counterpoint Market Intelligence predicts that the pace will accelerate as more carriers embrace the idea of a separate cabin on long-haul flights, featuring slightly wider seats, several extra inches of legroom, a deeper recline, bigger screens, and maybe just a little bit better food and drink.
Exactly. I've done it when my personal flying, that, sometimes you just kick in a little bit or use some points and you get just a little bit more room, a little bit leg room. I mean, personally, I think everybody should have a little bit, like even an inch or two more.
Is that a message to the FAA?
Love you, airline industry. We're squeezed in there like cattle, but
I don't think that's a controversial opinion, Carol.
I don't think so either. Anyway, this story in Bloomberg Business Week, so check it out. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Big day for the U.S. stock market with the Dow, the S&P, NASDAQ all rallying today. The reopening trade roaring back. S&P up now by 49, up 1.1%. The Dow up 490, have been up 500, up now by 1.5%. NASDAQ up 104, a gain of 0.7%. Stocks are rallying as prospects for an economic recovery outweigh concern over faster than estimated inflation at a time when the Fed is getting ready to wind down stimulus. 10-year up 5/32, 10-year yield 1.47%. Spot gold up 0.1%, 17.59 the ounce. Bitcoin is surging 9.9%. 47,754 right now for Bitcoin. And crude, West Texas Intermediate up 1%, 75.76 a barrel. So again, recapping here, we've got the S&P up 49, up 1.1%. The Dow up 1.5%. NASDAQ up 0.7%. Big move higher today for Merck, promising results for its experimental COVID-19 pill, fueling a rally for airlines, cruise operators, and hotels. Merck shares up now by 9.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Well, this is among our most read on the Bloomberg today. It's something we were talking about on our planning call this morning. It's also in the new issue of Bloomberg Business Week magazine, out now online and on the Bloomberg. Tim, is about Atlanta's wealthiest and whitest district.
Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. Also joining us from Atlanta is Brett Pulley, Atlanta bureau chief for Bloomberg News. He's on the phone in Atlanta. Joel, how can the wealthiest district of the city of Atlanta secede to create its own new city?
Well, we're going to find out. But this process is actually kind of underway. And there's a number of loopholes they've had to jump through already to attempt to do this. This neighborhood is called Buckhead, and Buckhead would effectively attempt to de-annex from the city. And Brett, why would they even want to do that? What's going on?
Well, it's an interesting thing. I think it's a combination of things. Without a doubt, there has been a really dramatic increase in violent crime, which has also happened in a number of large cities around the country as we've struggled to emerge from the pandemic. So that first and foremost, I think, is the thing that's really giving this legs. And of course, it hasn't since it was organized earlier this year, the Buckhead City movement. It's really picked up steam. It's almost as if with each crime that's committed in the area, more money comes in. This organization has raised, they say now, nearly $1 million. So it's gotten real legs. And also, the legislature, the state legislature, has agreed to consider it when they come back in the spring. Now, of course, that's after the mayor's race. There will be a new mayor in Atlanta this fall.
Well,
but they consider it, and then if they do indeed pass this bill, then it goes up for a vote next fall.
So, Brett, I'm glad you brought up politics, because how does the growing and impactful Black political class feel about this?
Yeah, it's a great question. I mean, as you know, one of the things about Atlanta, one of the unique things, I think, is that, Atlanta has been involved for many years, really in this movement, right, to empower African Americans. And, the city has had a Black mayor now, since 1973, when Maynard Jackson was first elected mayor. And today, a mostly Black cast of elected officials is in charge of, what is the largest city in the South, and has this really high concentration of Fortune 500 company headquarters, et cetera. So it strikes right at the heart of that power base, because much of Atlanta's, or a critical mass of Atlanta's white population is in that area of Buckhead, which would become, if they did indeed de-annex Buckhead City.
It's a really wealthy area, especially compared to Atlanta. About half of households there have an income over $100,000 a year versus in Atlanta, as you point out, which is just about 30% of households there. What's the tax hit that the city of Atlanta could take? What are the economic implications for the city of Atlanta if this were to happen?
Yeah, no, without a doubt, it would absolutely strike at the city's revenue base. There's what I call an exact number. It's I want to say about 40% of the revenue of the city's revenue comes from that area that would leave the city. And then, of course, there are a number of feasibility studies that have looked at the impact, and then there are some big issues out there like what services would a Buckhead city continue to use or desire to continue to use, such as the Atlanta public schools. So there are a lot of variables there, but I think the general sense is that about somewhere in the area of 40%, maybe even a little bit more, would be lost from the city's revenue.
In your story, I think you point out that the math that we did here, you guys did for the story, in your story, shows the neighborhood accounts for nearly 40% of tax revenue generated for Atlanta. So, Joel, that's a big deal.
Not insignificant, and to think, major American city suddenly, becoming kind of two cities is sort of an unfathomable idea.
Yeah. Who's next then?
And in theory, you could see a lot of cities attempting to do this stuff. So Brett, there's been several loopholes that or hoops that they've jumped through so far. What are the main ones that they have to get through next in an attempt to hit this 2023 aspirational target?
Sure. Well, the biggest one is to get it on the ballot for voters in November of 2022. And so that's going to be a matter of this bill passing in the state.
And that's a state ballot, right? Georgians are voting on it, not Atlanta residents.
Yeah, but you know what? There is a distinction there, and there is. I want to say that it's the representatives who represent the area impacted are the ones who vote. But I'm not sure. But I know that it's not as straightforward as the entire. Look, it could, given the makeup of the state legislature, it very well could find its way to the ballot. And then it's about what the city of Atlanta decides. That would not be a statewide.
Right, and that's the catch in the story. Only the people who live within the boundaries of the proposed new city would get to vote on it.
That's right. Yeah.
And that means the majority of people who live in Atlanta would actually have no say on whether or not Buckhead would remain part of the city or not.
Even though, as the story points out, it would have serious implications for the health of the city.
40% of that revenue, right? So yeah, it's clearly there's a battle line that has been drawn through Atlanta, and it's largely a racial one as well, right, Brett? Because this is like the headline points out, this is the richest, whitest part of Atlanta. So is that how raw is this feeling in Atlanta right now, since you're there?
And Brett just got about 20 seconds, so just quickly.
Sure. Well, clearly race and class. They're very much a part of this, but none of these things are, no pun intended, completely black and white. This Buckhead City movement. There are some people, for example, there were some police officers who were fired by the current mayor who were supporting the movement. So it'll be interesting in the spring when the legislature takes it up.
Well, looking forward to updates and seeing where this goes. Brett Pulley, he's our Atlanta bureau chief here at Bloomberg News, on the phone from Atlanta. Joel Weber, editor of Bloomberg Business Week, here in our interactive broker studio. Check out the new issue of Bloomberg Business Week on newsstands, online at businessweek.com, bloomberg.com, and on the Bloomberg terminal.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this first trading day of the fourth quarter. It's a Friday, October 1st. The Dow, the S&P, NASDAQ all pushing higher. But first, we begin with this headline from the Bloomberg Professional Service. U.S. CLO sales hitting a record $130.7 billion amid buyout loan boom. That headline from the Bloomberg. The reopening trade roaring back today with the S&P up 56, up now by 1.3%. The Dow up 550, now up 1.6%. NASDAQ surging 125 points, up now by 0.9%. And the NASDAQ 100 index up 0.7. Broad-based rally. Russell 2000 up 2%. Dow Transports up 2.2%. Bitcoin surging 9.9%, 47,749 on Bitcoin. 10-year up 6/30 seconds. 10-year yield right now 1.46%. Gold little changed, up less than 0.1%, up $1.50 the ounce to $17.58. And West Texas Intermediate crude up 0.8%, $75.67 a barrel. President Biden has signed a stopgap spending bill to keep the government open till December, but Congress still needs to act on the debt ceiling, or the government could default as soon as 17 days. Experts think that will not happen, but former Treasury Secretary Larry Summers says there is always a chance.
People who play games of chicken never plan to crash their cars and die, but occasionally they do. And that's the risk in this thing. And I hope people will find a way to recognize reality.
Hear more from Larry Summers later today on Bloomberg Wall Street Week, 6 p.m. Eastern on Bloomberg Radio and Television. Merck shares posting their biggest gain in 12 years after the company's experimental pill slashed the risk of getting seriously ill or dying from COVID-19. Merck up now by 9.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Radio Business Week. Tim and Carol here. Top story this Friday, Bitcoin jumping. We're right now up just shy of 10%, 47,742 roughly, rising quickly and having its biggest daily gain since July. And other digital currencies also surging. It's a bit of a shock rally, Tim, that we're seeing. And that followed the largest monthly decline since the month of May.
Yeah, the big tick up that we saw happen in just minutes happened just after 6 a.m. And the big question is, why? Well, fortunately, we have with us Joe Weisenthal, digital news executive editor for Bloomberg News. He's with us in the Bloomberg Interactive Brokerage studio. Perhaps you know him on Twitter as the Stalwart. Joe, why? If there's one guy who can answer this, it's you.
Why does a cryptocurrency move? I have no idea. And I mean that in all sincerity. I have spent years trying to figure out why sometimes coins go up and sometimes coins go down. And it's very rare that there's ever any obvious fundamental reason for short-term moves. Sometimes there's even bad news, like we get days like today where there's like a major DeFi platform got hacked, which we have a story about, or news that the government wants to regulate stable coins. You might say, well, this is not great for the industry. Coins go up. Other days, things are good and coins go down. One thing I do think is interesting, though, is if you go to crypto on the terminal and look at all the different coins we track, Ethereum and Litecoin, et cetera, they're all up about the same amount, between 8 and 10%, which to me tells us that the state of crypto is still such that by and large, things are highly correlated, money goes in and out at the same time, and that these moves are not related to coin-specific fundamentals.
Is it related at all to what we heard from Jay Powell yesterday when he was asked if he would ban or limit cryptos, similar to what we see out of China, who has banned them multiple times? Powell said no, he had, quote, no intention to ban them.
You know, it could be,
but
like,
that was
but it's
hours
not
ago,
that,
and
it
that's what
doesn't,
surprises
the timing, and, you know, I don't think many people thought a Bitcoin ban in the U.S. was, like, in the cards, so it's very strange. It's like people have driven themselves mad trying to explain why coins do what they do.
What about, go ahead, Carol.
If there are never really any fundamental reasons why crypto trades as it does, then why do we even think about talking about potentially institutional investors being involved?
I think over the medium to long term, there might be fundamental things, whether it's people bullish on finance through smart contracts, whether it's people perceiving a coin like Bitcoin as a safe haven, digital gold, adoption in emerging markets. So there's certainly medium to long-term macro stories that I think can explain why institutions would want to allocate money to this space. But why one day at 6 a.m., maybe a billionaire bought some Bitcoin and it was illiquid at the time and a bunch of people got alerts on their phones and bought more.
That's what I was wondering, if there was some sort of whale.
Could be. That would be my guess.
But is there something to make it a much more understandable? I mean, if it becomes more regulated, will that make it a more normal, quote unquote, market?
What I would say is that over time, as people get more familiar with these coins, I would expect that they start to trade in dispersion as people appreciate the differences between them and certain fundamentals differences. But why does the stock market go up one day and down the next? Who knows?
Well, that's true, but we can often find some fundamentals.
We can make something up.
More people are buying.
We can make something up.
Whoa! All right, we've got to talk about this. What?
I just want to say, I want to go from Bitcoin to minting the coin. Okay?
Yeah.
The big,
from one crazy thing to another.
Platinum coin that doesn't actually have to be a big, huge coin, Joe.
So this is the key thing. We're gaining momentum in this story. We are, perhaps 17 days away from hitting the debt ceiling, which in theory could lead to a catastrophic default, the failure to pay debt on treasuries, potentially imploding the financial system. One solution, if you can't borrow more money, is for the Treasury to create a $1 trillion platinum coin, put it in its account and continue spending without borrowing further. There was a 1996 law that grants the Treasury Secretary broad discretion in the creation of platinum coins specifically, both in terms of their size and denomination. And although the creators of the law perhaps did not intend it to be seen as this way, a plain language reading would seem to allow it.
Okay, let's do Schoolhouse Rock for a second. And so for everybody listening who's going to be having a cocktail over the weekend, say, did you hear about this $1 trillion coin?
Yeah.
Explain how this works. Because to me, it sounds like you're almost like printing money and you still have the debt and
Totally. So one thing that people understand through Schoolhouse Rock is that the power of the purse resides with Congress. It's one of these sort of basic things. Only Congress can allocate money, which is true. But you can get into a situation in which Congress has, say, sent the executive one set of instructions, spend $3 trillion over the next few years on X and Y, and another set of instructions, don't borrow anything further because we haven't authorized an increase of the debt ceiling, in which case the executive is then faced with two contradictory laws and would be in an impossible situation of having to choose one of the two laws to comply, potentially setting off a constitutional crisis. There is this loophole that was discovered in 2011 from a 1996 law that allows essentially broad discretion not to spend more money. The spending has already been authorized. This is not like suddenly, Biden could use this multi-trillion-dollar coin and get all his Green New Deal passed, because that would then violate the power of the purse of Congress. But what it could do is continue money to flow out from the Treasury's general account, which is held at the Fed, and make the payments that it's been legally compelled to make through previous acts of Congress.
Where does this platinum coin reside, though, and who's responsible?
So the logistics, I think, it's never been tested before. It's never been done. My hunch, I went on a high school field trip to the New York Fed in the mid-'90s, and there is a room down there in the vault that has all the gold bricks that many different countries hold their gold in. It seems pretty safe. Probably safe there. And the other thing is, look, let's be honest. If one of us stole the coin and we tried to spend it, I think we'd get caught pretty quickly.
Well, making change would be really tough.
It's like, is this the $1 trillion coin? It's like, no. This is another one.
This is a different coin that's worth almost $1 trillion.
So I think we would get caught pretty quickly in the event someone tried to steal it.
But it's debt that we ultimately have to pay off.
So that's the thing. I mean, look,
just quickly.
Historically speaking, we could raise money by selling treasuries.
Right.
But also historically speaking, countries have always created coinage as a way of making money. And although it's not a powerful or significant part of our money creation system today, there's a long precedent for the creation of coins as a way of creating money that can then be spent.
Wouldn't lead to runaway inflation?
No, because it's not new money that would be spent. It's simply the existing authorized spending from Congress.
All right.
Good questions,
I think
Carol.
I'm getting closer. Thank you so much.
Thanks for having me.
Love what you've been writing.
Joe Weisenthal, digital news executive editor at Bloomberg News. Let's get to Washington, D.C. for a check of the latest world and national news. Nancy Lyons. Hey, Nance.
Hey, Tim. House Speaker Nancy Pelosi plans to hold a vote today on infrastructure spending. It's still unclear if it'll happen. President Biden is heading up to Capitol Hill this afternoon to see if he can finalize a deal on infrastructure. And another one, expansive social spending. White House Press Secretary Jen Psaki says there has been progress in the last 24 hours.
What we're working toward is unifying a path to get both of these packages done. As a part of that, and we all knew this from the beginning, compromise is necessary. It's inevitable. Some have come down, some have come up in the numbers and what we're looking at here. That's what the basis of the discussion and some of the basis of progress has been.
Psaki says the administration's team has conducted more than 300 calls in the past few days to get something finalized. Merck says it's planning to seek emergency authorization for an experimental pill that a study shows slash the risk of getting seriously ill or dying from COVID-19. The pill, if approved, could eventually yield a simple way to treat many virus patients before they ever reach the hospital. Merck CEO Robert Davis spoke with ABC News.
This drug, this antiviral molnupiravir, basically is able to, if taken within 5 days of the onset of symptoms, significantly reduce the risk that a patient is either going to have to ultimately go into the hospital and, most importantly, reduces significantly the risk of death.
Davis says it would be an easy-to-use option. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, along with Tim Stanovic. We talked about the jump in Bitcoin. We're going to continue that conversation in just a moment. We're going to have the head of OTC options trading at the crypto bank, Kraken Bank. She will join us in just a moment.
What would you do if you got like $1 million in your account, one of your online accounts, and realized that the company sent it to you in an accidental way?
Somebody sent it to me
Yeah,
accidentally?
like the company, whatever platform you have, like the bank.
I would probably let them know. I'm a pretty honest kind of person.
Well, it's one issue that the DeFi platform Compound is running into right now. Mistakenly sent out $89 million, Carol. The CEO is begging for its return.
Yeah, this is one of those things you're like, hey, you got to be careful. You better have better interior controls.
It's tough to get that back, right?
I guess so, right? Because you don't have to.
I don't know. I don't know the answer to that.
I mean, I don't know.
I've heard stories about people getting in trouble for spending money that's accidentally been in their account. We had a story in Bloomberg about that a few months ago.
So the glitch, definitely a black eye for cryptocurrency platforms hoping to upend the traditional finance system. DeFi platforms don't have banks or other middlemen administering funds, instead relying on, quote, smart contracts that are struck between users that are governed completely by computer codes. And proponents, they like it. They think it's much more egalitarian in cutting out traditional firms, often using the mantra code is law to emphasize that computer code rather than fallible humans governing the system. But
okay, so here's what happened. The trouble started on Wednesday for Compound Labs when users approved an update to Compound's platform that contained a bug. The CEO said on Twitter that the bug caused too much COMP to go to some users, but since the platform is decentralized and requires a waiting period, neither his company nor anyone else had the ability to actually pause distribution of these tokens, and each token is worth about $319 as of today.
Homer Simpson. Oh, I mean, whoa. Like I said, I'm pretty ethical about this, and I would return it, but this just shows you that these are not perfect systems, far from it, right?
Yes, far from it.
All right, you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now for the U.S. stock market. 43 minutes to go ahead of the closing bell on this Friday, first trading day of the fourth quarter. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are surging after a slow start, helped by that news coming out of Merck. The Dow's currently up 614 points. S&P's gained 64. NASDAQ rises by 149. The U.S. 10-year yield at 1.47%. Gold is up a point. Transports gained 313 points. And Bitcoin surges 10%. Among the main 11 S&P sectors, all are in the green, led by gains in energy and the financials. And leaders to the upside in the Dow, Merck and Disney, while Walmart led to the downside. After earnings, Jefferies rose 2%. And in other news, Google abandoned its plans to offer bank accounts to users. And speaking of Merck, shares rose as much as 12%. That's the most since 2009 after their COVID drug cut hospitalization and deaths by half. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's time now for our weekly crypto update, brought to you by Interactive Brokers. Trade crypto for less coin with commissions, just 12 to 18 basis points, and no hidden spreads or markups. Learn more at ibkr.com/crypto.
So we just talked with our Joe Weisenthal, who follows all things crypto for us, and we talked about the big jump in Bitcoin that we're seeing. Let's get into it in terms of what we're seeing in the marketplace, and also talk a little bit about China's recent all-in ban on cryptocurrencies again, stepping up its ban. Judika Chow is head of OTC options trading at the crypto exchange Kraken. She also co-founded America's first approved crypto derivatives platform. That was Ledger X. She joins us on the phone in New York City. Judika, good to have you here with Tim and myself. Let's just talk a little bit about the rally that we're seeing. We talked about it with Joe. As Joe said, fundamentally, it's always hard to say why Bitcoin or crypto goes up or it goes down. How do you see it?
Yeah, I mean, I think at the end of the day, people will always try to ascribe narratives to price action and price movements. But I agree with Joe's sentiment that in terms of trying to look at fundamentals that change, there probably aren't very many. This week, we've definitely seen crypto moving with the broader market. And so in a way, I think that's reflected in the rally today. And then the other element that you sort of touched upon is we obviously had this knee-jerk reaction to the China news that was, I guess in retrospect, an overreaction as well. Not the first time we've seen that. And so a couple of these factors coming together, the confluence of them reflected in a little bit of an overnight rally, and then obviously continuing this morning with the broader market rally.
Is there any indication in looking at what you see when it comes to who bought or what was bought, or a quick increase in the price in such a short time after 6 a.m. that there was some sort of whale who came in and bought a lot of Bitcoin?
Well, in general, we've definitely seen institutional buying throughout the morning. It's hard to say, though, cause and reaction and which kind of came first. Bitcoin and ETH moved, but we've also seen activity in the altcoins. And so I think in general, it shouldn't be too surprising that in this momentum-based market, we started to see institutional buying coming into this morning. But I don't know if there's like one particular trade that you can ascribe it to. It definitely seems more not as liquidation driven as some of the larger mean reverting moves that we see in the space, and this definitely seems more driven by natural position building.
Judika, what's interesting is, and we're getting ready to have a discussion here at Bloomberg, I think it's next week or so, and really just talking about the institutional interest when it comes to cryptocurrencies and what it's going to take for there kind of to be an all-in buy-in when it comes to institutional investors, institutional portfolios, to have some crypto exposure. What are you seeing on that front?
Well, we're seeing it less of a binary thing and more institutions just looking to dip their toes and get involved in some degree. So even when crypto and Bitcoin sold off in May and June, we never really saw the institutional demand abate. They were just still looking to have some exposure. And in general, we're seeing institutions come for Bitcoin and ETH, but also to allocate some of their portfolio to altcoins, Solana, Cardano. We're seeing some of the other blockchains become part of the institutional narrative. And a little bit of those who are trading around are looking to allocate maybe back and forth between Bitcoin and ETH into the alts and back again. But overall, the demand has stayed fairly constant. It hasn't really been turned off by this volatility that we have seen. If anything, I think the volatility creates opportunity for institutions who are looking to make a move here.
Hey, in full disclosure, there was some news this week that you guys are paying a $1.25 million fine to settle allegations that it let U.S. residents, Kraken that is, illegally trade margin products linked to Bitcoin and other cryptocurrencies. Also, this is with the CFTC. I think they put out a statement on Tuesday. The regulatory oversight, what are the conversations you are having, and what can you tell us about that fine? And I'm just thinking about some of our listeners who are trying to kind of find their way forward. What does that mean? Why did that happen?
Well, to be honest, I'm not really the best person to speak on this since I manage our OTC options trading, but I can say that Kraken in general is committed to working with regulators. Our goal is really to just make sure that there's a level playing field and that we can help ensure that the rules governing digital asset trading in the U.S. and globally are part of a level playing field, protect the interests of individuals and the integrity of the industry. And I think there's a lot of good Kraken personnel and folks who are working on that.
Are there certain regulations that you would like to see that would make your job easier, that would make it easier for you to communicate these products and services to consumers?
Well, I think in general, broadly for Kraken as a global company, we're just always looking for clarity. And I think having just clear regulations that are, again, part of a level playing field and that we just know the way to operate. My experience as an entrepreneur in the past is that it's just easier to operate when there's clarity. And I know everyone's kind of working through the regulatory aspects, and I know Kraken is working with regulators, again, on just making sure it's a level playing field.
Hey, 20 seconds left here. China, a ban, does that matter to you, do you think, in terms of the crypto market going forward? And just quickly.
No, it's not new news. The market has known about it. Bitcoin has proven resilience against various countries trying to shut down aspects of it. So yeah. I don't think it's going to be a big deal.
Do you think it's a real ban, though?
It's nothing new. They've announced their intentions and they've acted on them.
All right. Good to run. Hey, hope we can check in with you again in the future. Juwithika Chow, she is head of OTC options trading at Kraken on the phone in New York City.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. Man, 29 minutes left. This day's kind of flying.
Yeah, this day's flying. The week kind of flew, actually, even though it was went from off to a rip-roaring start.
We were just looking at small caps. They're really on a tear today. That economic reopening really at the heart of today's trade. We're going to get to that in just a moment. Though, coming up, we're going to talk about that news yesterday we talked about, J.P. Morgan Chase being shut out of underwriting municipal bond deals in Texas. It's not just J.P. Morgan.
No, it's happening to other banks as well. We're going to get the latest from Amanda Albright, municipal finance reporter, in just a few minutes. In the meantime, a check of what's going on with that trading day. Hey there, Charlie.
Well, hello there. J.P. Morgan Chase shares, they're up 2.3% right now. We've got Citigroup higher by 1.8%. This update is brought to you by SCI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SCI's global operating platform. Find out how at scic.com/IMS. Carol's mentioning the Russell 2000 up now by 1.9%. Broad-based rally here. Dow Transport's up 2%. NASDAQ 100 index up 0.7%. NASDAQ Composite Index up now by 0.8%. Stocks are climbing as prospects for a pickup in growth outweigh concern over inflation pressures at a time when the Fed is getting ready to wind down its pandemic-era stimulus. Investors also keeping an eye on developments out of Washington. S&P right now up 53. That is a gain of 1.2%. The Dow up 525, up now by 1.6%. NASDAQ up 119, up by 0.8%. 27 minutes to go ahead of the closing bell. Stocks are trading near session highs. We've got the 10-year yield 1.47%. Gold virtually flat on the day right now, $17.57 the ounce, up just 56 cents. West Texas Intermediate crude up 0.8%, $75.60 a barrel. Big move for Merck. Shares up now by 9.4%, biggest gain in 12 years. The company's experimental pill slashed the risk of getting seriously ill or dying from COVID-19. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He says this could be an important weapon to prevent stress in the hospital system.
Taking it early, and this is the critical thing about antivirals, you have to identify this early, and that's why I think targeting antivirals to vulnerable populations makes a lot of sense. If you are over 65, if you have a medical condition that predisposes you to severe COVID-19, if you get that positive COVID-19 test, you want to start getting an antiviral right away to change the course of the disease.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Interestingly, we're looking at a down day for the vaccine stocks. Pfizer, though, just turning higher, barely up by 1 cent. Little change there, but BioNTech, its German partners, its ADRs down 5.2%. AstraZeneca's ADRs down 0.3%. The real damage, Moderna, lower now by 10%. J&J, Johnson & Johnson down 0.3. Merck, meanwhile, up 9.4%. Recapping 10-year yield 1.47%. S&P up 1.3%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And we are just coming off our best levels of the day. So this story broke yesterday afternoon. If you were listening to us, you heard us go through it. J.P. Morgan Chase being shut out of underwriting muni bond deals in the state of Texas. Today, Amanda Albright reporting on how Wall Street's 3 biggest muni bond underwriters have seen business grind to a halt in Texas. So we're talking about Tim, B of A, Citi, and J.P. Morgan.
Amanda Albright is municipal finance reporter at Bloomberg News. She joins us now on the phone from our New York bureau. Amanda, for people who aren't caught up to speed on what exactly is happening with Texas and with the muni business of these banks, take us through it.
Yeah, well, thanks for having me. So earlier this year, as part of kind of a flurry of legislative activity in Texas, a law passed that's called Senate Bill 19, and it was, we covered it at the time, and it just kind of went into effect September 1st, and we're starting to see the ramifications of this play out for the banks. So essentially, the intent of this legislation is to target companies that have enacted policies or practices or have guidance on the books that restricts, or in the words of this law, discriminates against the firearm industry or firearm entities. So we're starting to see this play out, especially in the muni market, where Texas represents a very big market for banks in terms of bond underwriting. So this month, basically these three banks have not underwritten any muni sale, which is very unusual. And that's kind of the first sign of this legislation really having an impact on their muni businesses.
Bank of America, Citi, JP Morgan holding their ground and saying we're not going to change what we do?
So it's complicated. So Citi is saying that they still are trying to, keep the muni business alive in the state, but it sounds like they're still trying to figure out how to navigate this legislation. And JP Morgan also cited ambiguity around the law and has basically said, for now, there's a lot of legal risk and it's preventing them from bidding on new business with public entities in the state. We have not heard from Bank of America yet, but that's kind of the state of play. We had been hearing for months now that this legislation, had a very uncertain scope. A lot of the cities we talked to, they said it had an uncertain scope, and so there's a lot that kind of needs to be figured out with this legislation. But for now, we can definitely say that it's having an impact on these banks.
What's going on with banks that are not Bank of America, Citi, or JP Morgan?
Yes, a very interesting question. So muni sales in Texas are still getting done. We're still seeing other banks participating in transactions. We reported yesterday that JP Morgan was actually replaced with UBS on a new transaction. So this could be an opportunity for other banks that, feel that they can comply with this law. It could be an opportunity for other banks to kind of rise up a little bit in Texas.
So how important, though, is it that you have either multiple underwriters on an issuance, especially in a big state like Texas, right, where there's, I'm assuming, some big issues that come up before investors? How important is that, though, that you have multiple banks who can participate and be involved?
Yeah, I think issuers will tell you that it's super important, especially given that these banks are so large. Their ability to take risk is different than a small bank would be. So I think a lot of the issuers are worried. They say it's a little bit too soon to say if this is going to have a meaningful financial impact on them. But, as part of one type of debt offering, banks will bid on bond sales and try to offer, the lowest borrowing cost to an issuer. So if you have three large entities taken out of that pool, we'll have to see how that affects auctions, but I think issuers are expecting it to have an impact.
All right, we're going to leave it on that note. Hey, thank you so much. Amanda Albright, she's municipal finance reporter at Bloomberg News, on the phone in our New York City bureau. Just taking a quick look at shares of JP Morgan, they're up 2.3%. Bank of America is up 1.8%. And if I take a look at Citi, it is up about 1.8%. But remember, there's definitely a risk on trade and the reopening trade, and banks do well when the economy is reopening and doing well.
And we're seeing that trade happen as we speak. Let's get down to check the latest world and national news. Nancy Lyons is in Washington. Let's go there. Hey, Nance.
Hey, Tim. President Biden is holding private conversations with House Democrats about passing that big infrastructure bill. The $1.2 trillion measure is stuck in a dispute between progressives and moderates over a much larger spending bill. Bloomberg's Washington correspondent Joe Matthews says both measures are top priorities for the president.
Joe Biden needs a win. This is everything he campaigned on. If you look inside what is supposed to be in this reconciliation bill, the expansion of Medicare, the child care component, not just the hard infrastructure that they could vote on today. This is what he got elected on.
Tune in to Bloomberg's Sound On with Joe Matthew at 5 p.m. Wall Street time here on Bloomberg Radio for the latest on those negotiations. California students 12 and older are being required to get vaccinated against COVID-19. Governor Gavin Newsom says the vaccine will join a list of 10 other vaccines required to attend school in the state.
We intend to do that once the FDA has fully approved the vaccine, which will give us time to work with districts, give us time to work with parents and educators to build more trust and confidence.
Newsom says there will be exemptions. The Biden administration is urging a federal judge to block the nation's most restrictive abortion law, which has banned most abortions in Texas since early September. U.S. District Judge Robert Pittman did not say when he would rule following a 3-hour meeting today in Austin. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
This next story that we're going to talk a little bit about, Nancy, thank you, is an interesting read. Noah Buhire, John Gittleson, and Patrick Clark, a dynamic trio, has a story out on the Bloomberg today about Charlie Munger, who, you know, billionaire investor, longtime partner with Warren Buffett, longtime business partner, the two of them over there at Berkshire Hathaway. So Charlie Munger made a well-timed bet on suburban apartments thanks to a neighborhood teenager who showed up at his house with a Hebrew Bible.
Munger couldn't read it, but the encounter led to an improbable friendship and, more than a decade later, an investment in California apartment complexes before the pandemic sent values soaring.
The young man's business, Afton Properties, has become a force in the market in the past few years. It bought more apartments in California than anyone else in 2020 on its way to building a real estate portfolio with an estimated value of $1.2 billion. That's according to Real Capital Analytics.
Well, Munger and Afton declined to comment on how much of that growth was funded by the 97-year-old investor, Charlie Munger, who, as Carol mentioned, is best known as Warren Buffett's longtime business partner. Still, Munger's public remarks and other data provide a glimpse into a little-known chapter in his storied investment career.
So, and it talks about the story of how Munger came to invest, began about a decade and a half ago. And it says, one day into my house, a very young 17-year-old Hasidic Jew came by and gave me the Hebrew Bible in Hebrew. He recalled at an event last year in California, referring to Mayor, exactly. And they struck up a friendship. Years later, Munger suggested they partner to buy some buildings, and loan documents for one of the first properties that they bought show how things have improved. Occupancy increased to 98% last year from 95% in 2019, while net operating income climbed 15% to $6.9 million.
Well, part of the strategy that they use at Afton is to upgrade the complexes that they buy. This is according to Munger. They note that they spent $600,000 on trees in the first year. There's more money to be made taking care of the customer, Munger said.
Yeah, it's an interesting story. Afton run by Avi Mayer, and it's just fun if you think about how these folks come to be or how they come to invest in things, especially some that have become as wealthy and successful as Mr. Munger. All right, you're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. First trading day of the quarter, we've got ourselves a rally underway here with the Dow, the S&P, NASDAQ all advancing very close to session highs right now. Stocks are climbing as prospects for a pickup in growth outweigh concern over inflation pressures at a time when the Fed is getting ready to wind down its pandemic-era stimulus. Investors also keeping an eye on developments in Washington right now. The S&P is up 48, up 1.1%. The Dow up 495, up 1.5%. NASDAQ up 109, up by 0.8%. 10-year yield 1.47%. Cannot ignore the Russell 2000 today up 1.7%. Dow Transport's also up by 1.7%. Gold higher, little changed, up 0.1%, $17.58 the ounce. Bitcoin surging 10.5%, now at 47,948. West Texas Intermediate crude up 0.8%, $75.66 a barrel. Promising results from Merck's experimental COVID-19 pill, fueling a rally for companies that stand to benefit from an economic reopening. Hotels would fall into that category. So would airlines. Look at UAL up now by 7.7%. We've got American up now by 5.5%. Delta up 6.5%. Southwest rounding out the big four up 5.6%. JetBlue up 6.6%. And that's Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The Federal Reserve is scrambling to deal with an urgent question. Should its officials be allowed to trade in the securities of companies and other issuers that its decisions might affect? The answer ought to be obvious. No, they shouldn't. The central bank's conflict of interest rules have come under scrutiny because of the uproar over the trading activity of two officials, the Boston and Dallas Fed chiefs, who each announced their retirements this week. Fed Chair Jerome Powell has ordered an ethics review. Here's a suggestion. The central bank's top officials should not be allowed to trade or hold securities with only rare exceptions. The legitimacy and effectiveness of any government institution depends on trust. That goes for judges, legislators, and anyone in power who claims to act on behalf of the public. And it certainly goes for the Fed. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
So just roughly 10 minutes left in the trading day, and to wrap up the trading week, the first day of trading in the fourth quarter. And as we do, President Biden has arrived at the Capitol. He is there. We know that there's a stalemate between those House Democrats. It's really holding up a vote on legislation for that $550 billion in new spending on infrastructure. So President Biden making a trip up to Capitol Hill. So that is certainly on our minds on this Friday.
Well, let's drive to the close, and in order to do that, let's get to Anur Gagar, Global Investment Strategist at Commonwealth Financial Network, joining us on the phone from Waltham, Massachusetts. It's really great to have you on the show today. Talk about a reopening trade on a day like today. And look, just to keep things in perspective, even though we are seeing broad-based increases when it comes to the equity markets here in the U.S. today, we are still finishing the week down. What do you make of it, Anu?
Well, first of all, thank you so much for having me here today. So let me just zoom out a little bit and reflect on Q3, and then we can start looking into Q4. So Q3 was started on a strong note, and then some tropical storm clouds started to build up in September. There were a few Category 1 or closer to Category 2 storms that the markets experienced with the Delta spread, the Evergrande default, possibility, the Fed's announcement of intention to announce tapering in the upcoming months. There was some seasonality and quarter-end effect at work as well, with September typically being a month end for the markets. So that was what was reflected in most of September and also in last week. Fortunately, as we start October, it's been a primarily green day today. So a good start to the quarter.
Yeah, pretty broad-based rallying. We are seeing certainly in the trade today, and we're just off our best levels of the session. In terms of opportunities, though, depending on the day, depending on the mood, Anu, and depending on the sentiment that's out there, it could be investors worried more about inflation. Today, as Tim mentioned, it's all about the reopening trade, buying into the economic recovery. We're certainly seeing that play out. What might you think the remaining last quarter of this year, are we going to be more concerned about inflation, or do you think we're going to be more involved in the economic recovery? We certainly got some data points that played into a little bit of both, inflation and recovery today.
Sure. So looking into Q4, I do see some of the heightened risks receding, especially as far as the medical risks are concerned. But as you pointed out, some risks remain. There is the Evergrande default risk that hasn't gone away. The monetary tapering that might actually begin this quarter, the debt ceiling talks, which will again gather pace in the upcoming weeks as the December 3rd extension nears, and then the supply and labor shortages that are feeding into what appears to be a little bit more sticky than just transitory inflation that might intensify.
What do you mean?
For the market.
Well, sorry, I just want to make sure. I just want to jump in here. What are the examples of the more or the less transitory elements of inflation that you're seeing?
So the primary one would be the supply chain constraints. We have about 85 ships that are anchored in the ports of Long Beach and Laguna Beach, and those are still waiting. Those are goods that are still waiting to hit the shelf. So, and for that, we need truckers. We need, trucks and truckers. So there's a labor shortage right there. So these shortages could extend beyond 2021. They could go very well into 2022.
Hey, one thing I know, you're a global investment strategist. You look at the world. We've all been looking at the world, or the world, I should say, has been all looking at China a lot lately because of its bans on various industries, clamp down on big technology in particular. And it really does seem like China is setting the course for a very different type of economy that maybe isn't quite as dramatic when it comes to growth. We've certainly said that many times around the table here in our studio. Having said that, I look at the Dragon Index here in the United States. It definitely has been on a tailspin to, downward this year. How do you see it? Are there opportunities when it comes to Chinese names in particular?
So you're very right. What we've seen in 2021 so far is a very different market environment for Chinese equities compared to 2020. It appears that not a day goes by without a new crisis rearing its head in China, and the equity market weakness is a reflection of that. But when you think about the best approach to investing in China, I will highlight 3 key points. The first is read the Z leaves instead of the tea leaves. What that means is invest in private enterprises that play into the government's agenda of common prosperity. So these could be industries in green technology, high-tech manufacturing, electrification, healthcare for the aging population, etc. Large monopolies might see their profitability tempered, and this will be reflected in their stock prices. The second key point would be wary of comparisons such as Alibaba versus Amazon, for example, because the regulatory overhang might make the business models look quite different, or the fair value calculations look quite different. So in other words, what worked in China before may not work in the future, and what works in the rest of the world may not work in China. And finally, love it or not, just don't ignore it, because China accounts for nearly a fifth of the world GDP and population. So it is really hard to overlook. It's the elephant in the room.
Right.
Even if it slows down from the high growth rates of the last decade, just given its sheer size, it will still be a major driver of global growth.
No, it's something to think about, right? And the implications, you're right. It's still significant growth in comparison to many other economies around the globe. Anu Gagar, she is Global Investment Strategist at Commonwealth Financial Network, on the phone from Waltham, Massachusetts. Our thanks to her here on this Friday. Just a few minutes left in the trading session, folks, and hovering near our best levels of the day. So what does that mean? Up about 1.25% on the S&P 500, up 1.5% on the Dow Jones Industrial Average. NASDAQ better by almost 0.9%. So, Tim, first day of the fourth quarter, and it is definitely a risk-on trade here.
Yeah, about four stocks for every one stock that's lower in the S&P 500. So very broad-based.
All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Sonali Bassick, and Katie Greifeld filling in for an absentee Caroline Hyde and Taylor Riggs. I'll never forgive them, but don't worry, we're still going to count you down to the closing bell with our global simulcast team, Carol Masser and Tim Stenovic. Thank you for showing up today. Carol, look, this started out as a week where it looked like the world was about to come to an end, and we're ending on a relatively high note. We're still down on a weekly basis, but on a daily basis, you are seeing people come back in and buy into this market.
You know, Romaine, markets go up, markets go down, and we definitely see that play out this week. It is.
You just summed up our careers.
Isn't that true? We're here for you, by the way, Romaine. Listen, whether it's airlines, we've seen them take off in a big way. That reopening trade, the super composite airlines index over on the S&P, it's up about 6%. Check out hotels, resorts, cruise lines. That super composite index for the S&P is up roughly 4%. So investors today saying, I'm not worried about inflation. I think the economy is getting better, and more companies are going to benefit, Tim.
Yeah, look at the outperformance of the Russell 2000, at least just a couple minutes before close, showing that the reopening trade is really what's happening today. And Romaine, I'm glad you brought up that context for a down week, because even though we are seeing broad-based gains in the S&P 500 today, we're still going to finish the week down by more than 2% on the S&P 500. I'm sorry, but you got to do it. I mean, the NASDAQ is still going to be lower by more than 3% this week.
Yeah, and you still have the VIX at a 20 handle right now. So, you know, the question is, does it get worse from here, or is there a little bit more relief as we see some positive headlines bleed through the noise, guys?
Yeah, and what's interesting to me is that you saw this huge reaction in stocks from the bond market, and I mean, that's not how it's supposed to go. Usually when yields rise, it's supposed to be good news for stocks, but everything's upside down now.
Well, you actually did see bids come back into the Treasury space today, and of course you're seeing the bids come back in to equity markets, bells ringing, people clapping. The Dow Jones Industrial Average up about 1.4%. That's 489 points if you count that. S&P 500 higher by about 49 or 50 points, about 1.1%, and the NASDAQ Composite up by about 0.8%. We should point out, though, as you said, Tim, all three of those indices are deep into the red on the week. The NASDAQ down about 3% here on a weekly basis. Take a look at the Russell 2000, because you did see bids come back into that. The Russell at one point actually flirted with the idea of actually turning green on a weekly basis. Not quite going to make it there. Still down about 0.3% on a weekly basis, but on the day, outperformance on the day, 1.7%.
Yeah, reopening trade definitely good for those small cap names in particular. As for breadth, 401 names in the index higher today for the S&P 500, 103 lower, 2 unchanged. Bitcoin, how did we not mention Bitcoin today?
We should mention Bitcoin today.
All right,
we haven't talked about that at all.
Up about 10.5%. Quite a move. Pick your crypto, and they're all really trading in tandem.
Is Bitcoin your favorite crypto? Mike McGlone told us Bitcoin's over, that they moved on to something else. I didn't understand what it was.
Really?
No, not
Seymour,
today, though.
Seymour a Dash kind of guy?
Something about stable coins or something, I don't know.
All right. Anyway, Tim, what do you got? Or,
Yeah.
Actually, where are we going?
Let's talk to Katie.
I want to talk about sectors here. Let's
All
talk
right,
about some
let's talk
industry
sectors.
groups, because, again, we're ending the week on a pretty cheerful note. Not so much if you look really at the sector level. If you look right at the bottom, you have semis there. Then you have retailing and food and staples. We know those companies have been hit really hard by all the challenges in supply chains right now. That is showing up on the screen. But if you look at the top of the pile, we do have a little bit of green there. It's energy and banks. Some of the biggest names in value indexes clearly got a lift this week from that spike in treasury yields, cooling off a little bit today, but on a weekly basis, still energy up 5.7%, Carol.
All right, got it. That's a look at the kind of bigger, broader picture in terms of groups. Let's talk about some individual gainers, if we may. Merck, this is one of the big companies' news and stock stories of the day. Up 8.5%. It was up as much as 12.3 at its highs today, but closing up 8.5% at 81 and change. Topping the S&P 500, posting its biggest gain in something like 12 years. The company's experimental pill slashing the risk of getting seriously ill or dying from COVID-19. That's a study. They're going to try and move forward for emergency use reauthorization from the FDA, but this is about in-home treatment. This could really be a game changer when it comes to treatment for COVID. Want to talk about Zoom. It was top in the NASDAQ 100. It was up about 2.33% today, and we did see that stock. We got the news that Zoom and Five9 killing their deal to get together. The shareholders of Five9 that rejected that all-stock deal. Anyway, Zoom moving higher on that news. One thing real quickly, Dollar Tree, top of the NASDAQ 100. We saw a surge in that stock, announcing a massive buyback. We talked about this yesterday, and also a move to offer items that cost more. Analysts weighing in. Some of them didn't all necessarily think the news was positive. Thought it was about dealing with some higher costs of the company, but investors nonetheless.
Yeah, and that's your best performer on a weekly basis too. Right. Dollar Tree.
Yeah, pretty significant.
Hey, I want to go back to what you said about Merck because it's having widespread implications when it comes to vaccine makers that we keep a close eye on. Look at Moderna finishing the day down by more than 11.3%. I don't quite get this.
I don't understand this either.
Oh, I'm so glad
the idea that because Merck has a pill that if you get COVID, you take it, or a modest
exactly.
The vaccine you don't need the vaccine.
Thank you, Romaine. You took the words right out of my mouth.
People who are thinking that.
But
this is an alternative.
Well, the vaccine is completely different from treatment, right? But this
I'm not saying I agree. I'm just
and look, some analysts are actually saying, this is oversold on a day like today because people are making too big of a deal about it. But I don't see the logic in it. And we're also seeing shares of Novavax take a hit as well. Finished today down more than 12%. Regeneron, though, this one makes sense. Regeneron makes a mononuclear antibody that does provide treatment. It's a treatment that does work very well. But if there is a treatment coming from Merck that works almost as well, not quite as well as those monoclonal antibodies, then that could take a hit, and Regeneron could take a hit. Regeneron finished the day down by more than 5.6%.
Yeah, and of course we know that was also a very expensive treatment. We have no idea what that Merck pill is going to cost, but I think the assumption is that it's going to be maybe a little bit more within the reach of folks here. I'm going to do my best Taylor Riggs impression, get you caught up on what we saw in the yield space. I mean, look, when you look at this in terms of wire to wire, it doesn't really look like that much of a move here. You did get obviously a lot of juice going out of the 10-year as well as into the 30-year. But of course, the big moves that we saw on a, intraday basis were much more wild of a swing than that. Remember, you talk about a 2-year on the 30-year. That is significant that we've persisted and held that level, but we're still well below, or I should say well below, but we're below the 210 that we saw basically at the earlier this month, and I guess the 240 or so that we were a little bit earlier here in this year, 251 to be precise here. But this gets set back to the idea here of what people are buying into, guys, whether this is the actual sort of reemergence of the reflation trade. I'm not sure that really is it. When you look at what's being bought, this seems to be more of a bet that some of the reopening elements of that are really what's going to drive the market.
Well, it is really fascinating to see that investors kind of going back and forth about whether or not we're worried about inflation or wait, this is a sign that the economy is reopening increasingly. We just want to mention that Mohamed El-Arian over at Allianz, he did talk a little bit about inflation. Listen to this.
Inflation isn't going down. Inflation is hot at the core level. And you know what? If you do the pure statistical calculation, it's very unlikely they can get to that target. So they're going to be revising their end-year target up yet again.
All right, so he says it's hot. Let's not forget, we got PCE data today. This is the inflation data that the Fed watches, and it was hitting its high since 1991. Americans are spending more, but we do know household balance sheets, Tim, are in a healthy way at this point.
Right, we do. People have the money to spend, and the question is are they going to go out and spend? And if those prices go higher, to what extent are they actually going to pay more for goods? We did just speak to Anu Gagar at Commonwealth Financial Network, and she made the point that because the supply chain is so strained right now, we see it with ships off the coast of Long Beach, dozens of ships off the coast of there, truck drivers, people to actually unload these ships. That's going to lead to wages going higher, and she sees this going for more than a year.
And that's going to be the key theme to watch in earnings season, which is approaching yet again. It seems like it's always earnings season, but we've heard from so many corporate executives in the past few weeks, really, that they're having to deal with input costs, with labor costs, everything going higher. And that's really Whether that feeds into margins remains to be seen. I mean, margins still, operating margins were at a record high last quarter.
Definitely thinking about margins because, you know, you look at this runoff effect when it comes to supply chains, but then the prices of other things as well, guys, like homes and those mortgage rates. I mean, behind the scenes, Romaine and I have been talking
nobody buys homes anymore. They're too expensive.
We've been talking about
Carol, let's talk. I mean, other than Carol, we know she's like on her fifth home. I mean, to the point about spending and the idea. I mean, you talk about the data that we got. It did show that persistence in household spending, and you saw the persistence also in prices paid. Now, spending and incomes are still outpacing that, so I guess that's good enough, right?
Well, I'm going to go to, was it Katie? Katie, you talked about earnings. I kind of can't wait. I was looking actually earlier, JP Morgan Chase, they'll come out with earnings on October 13th. This will be our next gut check on what's going on in the economy and how companies are managing with some of these price increases.
And that's going to be fascinating because we are heading into holiday season. We know that it's going to be an issue. I haven't started holiday shopping. I pretty much figure I'm out of luck at this point.
Oh, yeah, it's over.
I know.
Handmade goods.
I'm buying a home for Romaine this holiday season.
Okay, all right.
Hey, what about me?
Better get in there for mortgage rates.
Just Romaine.
If the banks get started, we might just have just enough of a sweet spot to keep them in a place to keep investors happy.
Exactly. All right, guys, we got to go. That's going to do it.
Have a wonderful weekend, both of you.
You all have a good weekend. That'll do it for the Friday edition of Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again on Monday, same time, same place.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Good chat.
Yeah, it's good chat. Up day, down week.
Up week, down week. That's perspective.
Yeah, up day, down week.
Yeah, and I guess, you know, this is where I like to watch trend lines. We'll watch those 50-day or 90-day moving averages, you know, whether the indexes continue to bounce off some of those technical levels and whether that means, you know, there's a bottom when it comes to stocks.
You know what you could do for Christmas shopping this year if you can't get anyone anything?
Getting hair out of my mouth for those who are watching on YouTube, wondering what's going on.
You can just make your famous Carol Massar cookies.
You know, I'm thinking, I haven't done it because of COVID, and I know we've been very careful about having food out for everyone, but I think this
I've heard about them.
Although butter's going to probably be like 20 bucks a pound.
Got to start buying
Walnuts
flour now,
already
right?
are like $10 or $15 a bag. It's like crazy. I'm going to try and make them this year, though.
You can charge for them now.
Yeah. No, I wouldn't do that. It's not for you guys. All right, let's get another check on world and national news. Nancy Lyons, take it away.
Thanks, Carol. President Biden is meeting behind closed doors with Democrats on Capitol Hill, hoping to break an impasse on infrastructure and a broader spending bill for social programs. White House Press Secretary Jen Psaki.
He wants to speak directly to members, answer their questions, and make the case for why we should all work together to give the American people more breathing room.
Psaki says the president wants to make sure both proposals keep the focus on the middle class. There could soon be a new weapon in the fight against COVID. Pharmaceutical company Merck says its antiviral drug molnupiravir, reduced the risk of hospitalization or death by up to 50% in clinical trials. Merck CEO Robert Davis, interviewed by ABC News, calls it a game changer.
You take it over a 5-day course 2 times a day, and what it basically allows you to do, it enables your body to fight off the COVID-19 virus.
Davis says it's the first oral antiviral drug to fight the coronavirus. A federal judge is weighing whether to temporarily halt a Texas law limiting abortions. It says it appears to have been crafted to avoid lawsuits against the state. U.S. Judge Robert Pittman said today, quote, "In fact, I think that's what this whole statute was designed to do, to find a proxy for the state that would insulate the state from this sort of judicial oversight that ordinarily would exist. Enforcement of the law rests with citizens who sue to collect $10,000 bounties for each illegal procedure, a provision the Obama-appointed judge called very unusual. He did not issue a ruling today." Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic in our Interactive Brokers studio. Natalie Wong of our Bloomberg News team talking about what's going on with Manhattan office leasing.
Yeah, this is so interesting because this is, this is a conversation we've had, right? We're talking about the reopening. We're talking about to what extent people are actually getting back to work. We heard about Google's big purchase last week. Listen to this. Manhattan office leasing jumps to its highest level since 2019. Manhattan's office market had its strongest quarter for leasing since late 2019 as demand rebounds from pandemic lows.
Which speaks to this conversation you and I have about, big urban centers. They're done. Well, they're not done. Deals were signed for 7.2 million square feet, 7.2 million square feet in the third quarter, up 59% from the previous 3 months. Collier's putting this out in a report today. While that's the highest total in almost 2 years, it is still, though, here's your perspective, still 12% below the borough's 5-year rolling average, according to the brokerage firm.
There's some interesting data when you dig into this, and some context and some color. Financial, insurance, and real estate firms, they were the ones who led leasing in the quarter, followed by technology, advertising, media, and information services firms.
And asking rents have mostly stabilized, falling less than 0.1% from the second quarter. The average of $72.74 a square foot was the lowest since 2017. Rates are down 8.5%, though, since the start of the pandemic. It's good to know this, to kind of get a feel of what's going on with cities. Because I've been wondering, I really thought with the pandemic, and I think a lot of other smarter people than me thought that, okay, commercial real estate is going to be in trouble. As we saw so many people flee the cities, and then we had more and more conversations around hybrid work or not needing office space. I don't know that that's necessarily happening.
I don't either, and I also think that there are two sides to every coin. And I speak again about what I saw in my hometown, where I live, in a neighborhood in Brooklyn that is just absolutely vibrant right now. Sandwich shops that on weekends are being packed on weekdays to the same extent now because people are working from home and going to those places. So they're spending their money in different areas.
Yeah, exactly, right? Much more local, at least to where they live. So it's good to get these kind of stories, and we have to kind of continue to piece them together. And ultimately, when you piece it together, you get a trend line that really tells you the longer-term story. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletta. Losing week for the U.S. stock market and up Friday, first trading day of the quarter. And this update is brought to you by Witham. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit Witham.com for more. S&P 500 index up today by 49 points, up 1.1%. The Dow up 482, up 1.4%. Nasdaq up 118, higher by 0.8%. 10-year up 6/30 seconds. 10-year yield 1.46%. Stocks climbed as prospects for a pickup in growth outweighed concern over inflation pressures at a time when the Fed is getting ready to wind down its pandemic-era stimulus. S&P 500 index up 49, as I mentioned, up 1.1%. Gold, higher, little changed, up 0.1%, $17.59 the ounce. And West Texas Intermediate crude up 1%, $75.74 a barrel. Cannot ignore Merck today. Promising results for its experimental COVID-19 pill triggered a rally in companies that stand to benefit from an economic reopening. That helped give the market a boost. Merck shares up today by 8.4%. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, you know his work. You've read it. You've watched it. He covers so many of the interesting technology, trading, and media trends impacting our world. Talking about Ben Mesrich. He is the New York Times bestselling author. He wrote The Accidental Billionaires. That became the hit movie detailing the rise and creation of Facebook, the social network. He's also written about the MIT students who bet on blackjack. That book was Bringing Down the House. He's written about the Winklevoss twins. And he also does some writing for Billions. And he's an interesting guy.
Busy guy.
And yes, and he's got a new book out. And he's busy, but he found time for our own Bloomberg News reporter, Janet Wu. And she caught up with him in a conversation we'll hear in just a moment. Janet joining us right now on the Access line in Boston. This guy's a big deal. He really has, his writings are just on the pulse of some really significant trends of our time, Janet.
You know, it's really funny because he and I are old friends and we joke about this. He said a hedge fund should just hire me and I'll sit in a room and write, and whatever I'm writing about, they should invest in next. But we'll hear soon he doesn't invest himself in these things, but he just seems to get these ideas and these big themes that drop into his lap. Now, he was kind of on a break. He was working on another novel that he had written during the pandemic, sort of a serial that was keeping us entertained in Boston when this GameStop frenzy exploded. And then here's what happened next.
I was watching it like everyone else, and it was just this crazy moment where GameStop's going nuts. But at the first, I was really just, being entertained by it, just like everyone else. Mm-hmm. Then I started getting phone calls and emails, people saying, you should be writing about this. And I started to look into it and realized I did have some access. I did, find some routes to get into the story. And by the end of the week, I knew it was something I wanted to write for sure.
The subheader of your book reads, The GameStop Short Squeeze and the ragtag group of amateur traders that brought Wall Street to its knees. You have so many interesting characters in this book, but we have to talk about the man known as Roaring Kitty.
Roaring Kitty, right. Keith Gill. He's from Brockton, Mass., lives in Wilmington now. And this is the guy who was in his basement on YouTube under the name Roaring Kitty. Because he fell in love with this stock, GameStop, which is kind of an absurd stock, a company that probably shouldn't be racing towards the moon in terms of stock price because it's something that, a brick and mortar store that sells gaming materials, consoles, physical stuff in a world getting more and more digital. But Roaring Kitty, was a regular guy to some extent. Had a brokerage license, but really wasn't a stock trader. He was someone involved in stock education for his job. But in the basement, he was Roaring Kitty, which is this persona he took on to push GameStop. And really likable, really entertaining, eccentric, I guess would be the word, with his long hair. And he put a bandana on, and he had cat posters in the background. And at first, people didn't know what to make of him. People were making fun of him. He'd go on the Reddit boards under another name, DFE, and we won't go into what that stands for.
We know what it means.
You're right. People can look it up. But at first people thought it was a joke. They were like, "This is ridiculous. You're putting all your money into GameStop." And he put $53,000 into the stock, which for him was a lot of money. You know, he didn't come from money. His dad, truck driver, his mom was a nurse, but he really and truly believed. And slowly he started to build this audience.
On the flip side, what did you learn about the Wall Street Titans you wrote about?
Right. Well, I mean, the main hedge fund in the story is Melvin Capital. It's run by a guy named Gabe Plotkin. And this is the guy who's won all his life. You know, he's always kind of made the right decisions. He worked for SAC before that, for Steve Cohen, was really one of the big stars, is one of the big stars on Wall Street. This is a guy who built a $12 billion hedge fund. And shorting GameStop was not even an interesting trade when you think about it. It was the right trade. This is a company, as I said, that really didn't look like it had much of a future. Looked like it was going the way of Blockbuster. The stock was trading at a few dollars a share. And he had shorted it even before that, shorted it all the way down from, I think, $30 or $40 a share. When you look at the math of it, it was the right move. Shorting GameStop made perfect sense. But what he didn't take into account was there's a lot more going on nowadays than what the math tells you, and things have changed dramatically, and I think that's what this story sort of brings to the front.
Well, that's Janet Wu, along with Ben Mezrich, the author of The Anti-Social Network, all about the GameStop trading frenzy. Janet, I'm wondering, you know, people know him because he has written so much. He wrote The Accidental Billionaires, which became the Social Network Facebook movie. Does this have the same legacy? Does what happened with GameStop and retail trading have the same legacy?
Well, as far as like exploding onto the scene, I think so, because this one actually happened as fast as the Social Network. The proposal for that book leaked online, and then he got calls and got a book deal right away. People started calling him saying, "This is a story that is for you." Within a week, he not only had a book deal, he sold the movie rights to MGM even before writing the first word of that book, and now it's already in production.
So on spec, they're basically like, "Yeah, we're in." Right?
Yeah. Well, you know, he's written 20 books, so he's kind of a machine. But what's really funny is that I was talking to Ben. We have many mutual friends, and we were in a New York, the living room of a mutual friend who's a New York investor, and people were asking him, like, "Wow, you must be making a lot of money writing about Facebook pre-IPO, writing about Bitcoin and all these things." He goes, "No." He goes, "I'm the worst. Everything that I do goes to zero." But so he didn't take part in this frenzy.
You mean he didn't buy any Bitcoin years ago?
He did not buy any Bitcoin. No.
Yeah, I didn't.
Janet.
Now, this is also something interesting. He was writing about this while it was still in progress. Wow. So it was very challenging.
All right, listen, good stuff. Thank you so much. Our Janet Wu, Bloomberg News reporter on the Access Line in Boston. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, folks, we're got a special guest coming up. We're going to talk a little bit about all the disruption and innovation that is going on in our world. We've seen a lot of it, and it was exacerbated, certainly, by the pandemic. Crawford Del Pret's back with us over at IDC. In the meantime, we just want to say we really appreciate all of our listeners that are out there.
Yeah, in fact, we want to send our special birthday wishes to Alex. It's her 10th birthday today. Her dad, Ryan, is a serious listener, gets in touch with us a lot.
Oh, so. Alex isn't a serious listener?
Well, she's 10,
never
so
too
she's
early to
probably
start investing.
In fact, I heard that the principal said happy birthday to her at school over the school's loudspeaker today.
Well, we do too, and we wish her well. All right, right now, let's get back to your top business stories. We're wrapping up the trading week. Here's Charlie Pellet.
Hi, thank you very much. And thank you so much for saying thank you to our listeners. We do not say thank you enough. We love them, and we're here for you. Here's what's going on. We've got the Dow, the S&P, NASDAQ, all rallying today. Right to the numbers. We'll give you some color in a moment here. The Dow up 482, up 1.4%. S&P up 49, up 1.1%. NASDAQ up 118, up by 0.8%. 10-year 1.46%. 10-year today up 7/32. Gold virtually flat on the day, up 0.2%. 1760. Look at Bitcoin up 10.1% right now, back almost with a 48,000 handle, 47,841 right now on Bitcoin. Crude up 0.9%, 75.68 a barrel. Stocks climbed as prospects for a pickup in growth outweighed concern over inflation pressures at a time when the Fed is getting ready to wind down its pandemic-era stimulus. Well, as for markets, Anu Gagar is global investment strategist for Commonwealth Financial Network. She was our guest right here on Bloomberg Business Week.
Some risks remain. There is the Evergrande default risk that hasn't gone away. The monetary tapering that might actually begin this quarter, the debt ceiling talks, which will again gather pace in the upcoming weeks as the December 3rd extension nears, and then the supply and labor shortages that are feeding into what appears to be a little bit more sticky than just transitory inflation that might intensify.
Zoom Video Communications and Five9 Inc. have scrapped their $14.7 billion merger agreement. Shares of both companies higher. Zoom up 2.3%. Five9 up today by 4.71%. Carnival cruises appear to be getting boozier in the pandemic era. Passengers spending proportionately more on alcohol, gambling, spa treatments, and other onboard purchases. This according to company executives on the latest earnings call. Carnival shares up today by 4.3%. Thank you again, listeners. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Time to go on a cruise, Mr. Pellet.
Without a doubt. Me, you, Tim, we're going to have fun. Bring along all of our engineers and everybody else.
Drinks on the Lido deck. Here we come.
And I'm leading the way. And then nighttime karaoke.
I bet you do.
He's got this whole thing planned already, doesn't he?
All right, Charlie, thanks so much. Well, our world, the reopening trade, we are seeing it as we come out of the pandemic, but we've also known the pandemic has caused a lot of innovation and transformations, definitely accelerated in things like healthcare, corporate travel. Think about all the meetings and conversations we've had virtually, retail supply chains, a lot of things have been impacted.
Yeah, they certainly have. And the big question is, to what extent does the disruption continue or the transformation to the cloud?
Yeah.
And how much of this has been pulled forward already? And do we see the spend decline from these IT systems?
Sounds like a question for our next guest. Crawford Del Pret back with us, president at International Data Corporation, IDC, as you know it. He's on the phone in Massachusetts. Crawford, nice to have you here with Tim and myself. How are you?
Hey, how you guys been? It's great to talk to you, and yeah, what a crazy time this has been over the last year and a half or so. It's great to catch up.
We talked with you. We were looking at our calendar, I think, back in April of 2020. A lot has happened since then. Those were pretty dark times. How do you describe and explain the innovation disruptions that we've seen and what it says more significantly about the world to come?
Yeah, so what's interesting is we now have a lot of data, right, over the last 18 months that we can look at. And, anecdotally, kind of what we thought we were seeing, we can now see in the numbers. And I'll just go with you for a little bit. But what we saw over the last 2 years, it felt like, tech it strengthened, right? And there were some areas that got hit, but it definitely strengthen. But, what we've seen from a parallel standpoint totally broke down in COVID. So if we go back all the way to the PC downturn of the 1980s, if we go to the dot-bomb or the dot-com, if we go to the crisis of 2008, when GDP crashed, tech would crash more. So, in 2001, GDP went to zero, tech crashed to minus 3% growth. In 2009, 2008, GDP went to minus, let's call it 2, tech went to minus 5. In this downturn, GDP went to minus 4, tech stayed positive. It actually, core tech stayed at 3% growth. And so the story here and what we saw in 2020 is that companies leaned into tech. They used tech to get out of this mess, to create new experience for customers, to create a stickiness with their services. In some sectors, it boosted, and in other sectors, they were able to stay very, very productive, even as we know, as the world worked from home. So it was really a downturn unlike any other. And in a lot of ways, tech kind of saved the day.
Well, Crawford, when you use the term tech, you mean technology, but not all tech is created equally, and there's different segments of tech, right? There's IT spend, there's spend for cloud transformation. So break it down for us and where we saw the spending grow, and perhaps parts where we didn't see that weren't so resilient.
Yeah, so I mean, you're absolutely right. So we saw, application software and core apps, they stayed with their double-digit growth. We saw, things like infrastructure as a service, still, delivering, over 30% growth. But you're right. I mean, if you're talking about core infrastructure, core servers, core enterprise network. That stuff in 2020 was, barely growing, or in the case of enterprise networks, in terms of dollars, actually, shrank almost 3%. So, if it was something that was related to the cloud, if it was something that was related to an app, you definitely saw a massive acceleration. But then in terms of tech, you also saw some kind of not intuitive things, right? It wasn't just, that we couldn't build PCs, which is the situation we are now. PC demand went nonlinear. So categories that, were kind of left for dead, we saw PC shipments grow 14%. We expect PC shipments to grow about 14% in 2021. So, continuing to grow, very, very dramatic.
Hey, hang on for a second. We'll come back with Crawford in just a moment. Crawford Del Pret, president at IDC.
I want to talk to him about PC specifically, Carol, because earlier this week, HP Inc., the ticker HPQ, got a downgrade. Right. It was one of the main decliners because, the stock was downgraded at JP Morgan because people had bought
all the PCs they need.
Exactly.
Exactly.
So I want to hear about that.
Hey, listen, just crossing the Bloomberg, President Biden says we're going to get this done after a meeting up on Capitol Hill. He's speaking after a meeting with House Democrats specifically. He says the timing for completing his agenda does not matter. So we'll see what that means in terms of future votes. All right, let's get back to world and national news.
Yeah, for more on that, we stay in Washington, D.C. and get an update from Nancy Lyons. Hey there, Nance.
Hey, Tim. House Speaker Nancy Pelosi says she plans to hold a vote today on infrastructure spending, but it's unclear if that's going to happen. President Biden, as you've mentioned, has been on Capitol Hill this afternoon to see if he can finalize a deal on infrastructure, as well as another deal on expanding social spending. White House Press Secretary Jen Psaki says there has been progress in the last 24 hours.
What we're working toward is unifying a path to get both of these packages done. As a part of that, and we all knew this from the beginning, compromise is necessary. It's inevitable. Some have come down, some have come up in the numbers and what we're looking at here. That's what the basis of the discussion and some of the basis of progress has been.
Psaki says the administration's team has conducted more than 300 calls in the past few days to get something finalized. Merck says it is planning to seek emergency authorization for an experimental pill that a study shows slashed the risk of getting seriously ill or dying from COVID-19. The pill, if approved, could eventually yield a simple way to treat many virus patients before they ever reach the hospital. Merck CEO Robert Davis spoke with ABC News.
This drug, this antiviral molnupiravir, basically is able to, if taken within 5 days of the onset of symptoms, significantly reduce the risk that a patient is either going to have to ultimately go into the hospital and, most importantly, reduces significantly the risk of death.
Davis says it would be an easy-to-use option. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. This story coming to us from Dow Jones Wall Street Journal, and it's interesting because we talk a lot about big tech and maybe their interest in the financial world, increasingly so.
Hey.
Hey.
It's a tough regulatory environment. Let's just say that.
I've heard that.
Yeah.
Really tough.
So Google is a company that had plans to offer bank accounts to its users, but now, as we learned today, is abandoning those plans to pitch bank accounts, marking a retreat from an effort to make the tech giant a bigger name when it comes to finance.
Interesting, because I think about Apple Pay, how well that seems to be doing, although I don't know the numbers.
Partnership with Goldman Sachs.
Correct.
So,
I'm big.
The Apple credit card, I should say. Apple Pay, you just upload your credit card and you can use any credit card.
And full disclosure, as soon as the pandemic hit and we were obviously not out and about doing, I just went right. I leaned all in.
Yeah, I haven't had a Metro card since the pandemic started. I just tapped the phone. You don't even have to touch the phone to the turnstile.
But if you go over to China, they've been doing this kind of thing for a long time. So I feel like we're playing catch up. I know they're like, yeah, okay. So the Alphabet unit announced almost 2 years ago that users of its Google Pay digital wallet would be able to sign up for enhanced checking accounts and debit cards at a handful of financial institutions, large and small. That included Citigroup and Stanford Federal Credit Union. The new offerings called Plex accounts would sync with Google Pay, carry both Google and bank branding, and provide a digital dashboard of where and how users spent and saved. Billed as a new way to bank and was expected to debut in 2020. A lot of missed deadlines, and then now we're saying not so much.
Yeah, Google's spokeswoman said the company would now focus primarily on, quote, delivering digital enablement for banks and other financial service providers rather than us serving as the provider of these services.
So back office, like being a path?
No, I think partnerships, right? You have the actual banks and the companies that have the regulatory relationships and have the approval are the fintechs. They're the ones who are able to do this.
To be fair, Amazon never moved forward with its checking account proposal. Facebook tabled its crypto push. So we've seen kind of the push and pull. Maybe Crawford will have some thoughts on that.
Yeah, we'll ask him in just a few minutes.
We will indeed. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. A losing week for the U.S. stock market this week. The S&P tumbled 2.2%. What a week. First trading day of the brand new quarter. Today, a rally. Stocks climbed as prospects for a pickup in growth outweighed concern over inflation pressures at a time when the Fed is getting ready to wind down its pandemic-era stimulus. Promising results for Merck's experimental COVID-19 pill triggered a rally in companies that stand to benefit from an economic reopening. Hotels, amusement parks, cruise lines among them, airlines as well. Today, we saw Merck shares rally 8.4%. S&P up 49, up 1.1%. The Dow up 482, up 1.4%. NASDAQ up 118, up by 0.8%. 10-year yield 1.46%. Gold up 0.2, $17.59 the ounce. And West Texas Intermediate crude up 1%. 75.76 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Crawford Del Pret, back with us, president at IDC Research, on the phone in Massachusetts. Hey, Crawford, we want to continue with you, but we just mentioned a story about Google scrapping its plan to offer bank accounts to users. Big tech. I mean, are they at some point, do you think, going to be, are you seeing or having conversations with folks in the industry that eventually they will be much more involved when it comes to finance, when it comes to healthcare?
Absolutely. This is going to play out over a number of years. And I think, what you're seeing with Google is right now, I mean, tactically, Apple was able to, and everything Apple does is about leveraging the power of, people talk about the numbers in their ecosystem. It's also the quality of the number in their ecosystem. You've got a spender with more disposable income in the Apple ecosystem, and Apple's able to do things like get this customer to use an Apple credit card, to aspire to an Apple credit card. They, frankly, just have more means. And even though Google's ecosystem is larger in terms of units, they don't drive as much value. They don't drive as much revenue out of that ecosystem. And I think that's kind of the rub that you're seeing right now. But over time, you will see healthcare companies and banks using more tech to create new experiences for customers, and that will involve tech companies that we all know.
Does it present regulatory risk, though, Crawford, to these companies? I mean, the term big tech is sort of pejorative for Democrats and Republicans, and I wonder if they get into healthcare more so, if they get into banking more so, if that just puts a target on their back from regulators.
Yeah, it does. Well, I mean, that's already happened, right? I mean,
a bigger target.
So for a lot, for a lot of these companies, it would be a bigger target. I guess I believe that healthcare companies are healthcare companies and banks are banks, and I think Apple's figured that out, and that's why they have done the partnerships that they've done, and I think you'll see more of those kinds of partnerships going forward. I think these companies are going to be in a position of powering other companies to be stronger with their tech, as opposed to jumping in and entering these new sectors at this kind of breakneck speed. I think you're probably going to see that happening a lot slower. Them going it alone, if you will.
Hey, Crawford, I want to get back to something that you said earlier, which was the growth of the PC market. And we saw that a lot of that demand for PCs get pulled forward over the last 18 months as people were working from home and needed machines at their homes rather than at the office. And I'm wondering, because earlier this week, HP Inc., ticker HPQ, was downgraded to neutral from overweight at JP Morgan, the bank lowering its price target to $30. The bank saying that they see moderating tailwinds for the PC market. And I'm wondering if you're seeing those tailwinds moderate as well, if that demand has been pulled forward.
Yeah, so there's a couple of factors going on here. There's a ton of demand that we just can't, the PC companies can't meet because of the semiconductor shortage.
Yeah.
But if you look at 2021, right, we expect to see the market grow about 14% this year in units. 31% of that growth happens in the first half, and about between 2 and 3% happens in the second half. Up 31% in the first half, up between 2 and 3% in the second half of the year. So our forecast kind of plays that out. Now, having said that, this market we expect will continue to grow, but it'll grow at lower rates going forward, more traditional rates. But the market expanded by, double-digit percentage in terms of units and won't necessarily give that back. Because what we see happening is that PCs are now viewed as kind of a safety net. And something was happening with PCs. People are consuming more media on them. They're using them. They're enjoying the bigger screens. And they're also basically saying, I got to have more of these in my, as a family, we need more of them in our lives. So in the U.S., the average number of PCs per household prior to COVID was about 2.5. Now it's more like 3. We don't see that necessarily going down. We don't see it rising. We don't see it going down. So we basically, there's been a shift here.
So just to rehash some headlines crossing the Bloomberg, and it does relate to our conversation, President Biden says that we're going to get this done. He's talking about the infrastructure legislation, completing his economic agenda. He says doesn't matter after meeting with Democratic lawmakers on the U.S. Capitol or at the U.S. Capitol. He says, quote, it doesn't matter when, it doesn't matter if it's 6 minutes, 6 days, or 6 weeks. He also says that a smaller bill can make historic investments. So I'm assuming he's talking about the softer infrastructure side of that. On the harder side, Crawford, what kind of analysis have you done that this potential infrastructure spending, which includes connecting more of America, high-speed internet access, which we have reported in here in Business Week about how many millions of Americans,
120 million.
It's huge, don't have that access. What kind of analysis have you had? Because I think about our investment audience are saying, okay, so how do I maybe play this ultimately if this infrastructure bill goes through?
Yeah, I mean, so what you're going to see if this infrastructure bill goes through is you're going to see steady demand in what we call ICT, so IT and communications technology. So you're going to see significant interest in the telecom infrastructure and building out telecom infrastructure. You're going to see the carriers continue to be able to see sustained demand. You're going to see uplifts and continued investment in things like security, because the security landscape becomes more and more complex as you bring more and more people online. So, that's why we believe that if you look at IT spending, that kind of comes back to about 6% by 2025. Our forecast says that ICT, including communications, that gets to over 7% growth by 2025. So it's really that idea that we're bringing more people online, and that really means that more has to be spent on the foundational technologies, the core infrastructure, in order to make this a reality for people.
All right. Really appreciate the time with you. Crawford Del Prete, president at IDC, on the phone from Massachusetts. So, thank you. Wrapping up the week, and just want to rehash some of the headlines because we did see President Biden go up to Capitol Hill, meeting with House Democrats and saying that the timing for completing his agenda doesn't matter. He says we're going to get this done after that meeting. He says a smaller bill can still make historic investments. Politico reporting that he discussed a top-line range of $1.9 trillion to $2.3 trillion. Joe Manchin, who has become crucial in this process, has talked about $1.5 trillion in terms of those soft infrastructure spending.
Remember, it's disagreements between Democratic moderates and conservatives on the size and shape of any larger plan that delayed a vote on the infrastructure bill on Thursday.
Yeah.
But Biden's saying that he's telling Democrats that the vote timing doesn't necessarily matter.
We'll see what happens. So could see some stuff certainly throughout the weekend, and we'll continue probably with this next week.
Joe Matthews' show is coming up in just a couple of minutes. Sound On, and he's going to be covering that.
And our weekend show is coming up. You can catch that Saturday morning at 8 a.m. We talked with Amy Nowakis, founder and CEO of Anthemis, FinTech Investment, Alan Patricoff, well-known venture capitalist, and we talked about the cover story.
Yeah, insider trading. Is it insider trading? Depends on what you mean by insider.
And you can read that, listen to our show, maybe have some wine, because Chris Rouser pursues It's All About Wine. From the whole Bloomberg Business Week team and Tim Stanovic, I'm Carol Masser. Have a good and safe weekend. This is Bloomberg.